Hello, fellow Ghost Traders. This is the market update, and this is your instructor, Scott C. Today is Sunday, September 15th, and it is 2024. Okay, let's first start on what happened this last week. And I'm going to be looking at SPY as kind of the proxy for the overall market. And I've got my chart adjusted so that you can see that it's opened up by about 30 spaces. This is a full 1-year chart. And starting right here, the very first week of September, we had this huge sell-off. The S&P 500 dropped 4.2%, and it was partly because of the market's kind of mounting concern over the labor market and how the labor market has seen some continued weakness. If we see continued weakness in the labor market, that might affect the Fed's rate cut decision. So I'm going to zoom in on the past 2 weeks, and we're going to take a closer look. So right where my cursor is, here on Friday, September 6th, the job report showed that 142,000 jobs were created last month, which was below the 165,000 that was expected. This softening adds a level of risk to the economy, but the current data doesn't suggest that we've got a recession coming up. Now, this week was really the worst week that the market's seen since March of 2023, which happened during the banking crisis, and we got way overextended to the downside. We were way oversold. So we're due for a bounce, right? Along comes Monday. And if you look at the candle that we had, we're going to call that a harami. Now, a harami is a candle that if you move it to the left, and the body of this candle fits inside of the body of the previous candle, it hints at a change in direction. In this case, we'd already had a big downward move, so this harami is going to be called a bullish harami. So even though it was a little bit of a good day, there were a couple of things that were kind of concerning still. You had Apple's latest iPhone that was revealed, and it fell flat with investors. The dominant Magnificent 7 tech stocks showed signs of faltering. And you got little things like share buybacks that are starting to wane. And then here on Tuesday, we had a little bit of a mixed performance. We still climbed throughout the day. We had tech stocks that kind of led gains while banks stumbled. AI-related stocks got a boost from Oracle, which had strong earnings. The financial sector had some concern because there were some major banks that issued warnings about potential revenue shortfalls. You even saw oil prices take a hit, and I think everybody was pretty excited and anticipating that presidential debate. One comment that I have about the presidential debate is that I was watching Bitcoin, and Bitcoin took kind of a drop after the debate, which led me to believe that cryptocurrency investors didn't think Donald Trump did too well during the debate because he's a little bit more the champion of cryptocurrency. And so if he would have done really, really well, I think we would have seen Bitcoin and other cryptos jump right after the debate. And remember, those trade 24/7. Now, Wednesday, September 11th, is where it got fun. So after a little bit of a bullish harami, kind of a bounce the previous 2 days where nothing really big was happening economically. If we go to the Forex Factor, you can see that Monday and Tuesday, there were no high priority events that came out with the US dollar. But on Wednesday, we got some major volatility, some crazy big drops down and then moves right back up. In fact, let's take a look at a shorter term chart. And on this 14-day, 30-minute chart, if we just focus on what happened on Wednesday, you can see that initially we had this huge drop, and then it started coming back up. there was a lot of volatility. Going back to the 1-year chart so we could see the whole day in summary, basically we had a triple threat happen. You had the presidential debate, you had the CPI report that came out on Wednesday, and then you actually had NVIDIA's presentation. The response to the debate was pretty mixed, with most online betting sites leaning towards Kamala, but you had a Reuters poll that showed undecided voters leaning towards Trump post-debate, which actually I found pretty surprising. If you go to the CPI report, the numbers came in hotter than expected where it mattered, with shelter inflation rising for the first time since March 2023. And this actually raises questions about the impact of potential Fed rate cuts on inflation. Now, when these numbers came out, the market initially reacted negatively, but then NVIDIA's CEO, Jensen Huang, I think I'm saying his name correctly, made some comments at the Goldman Tech Conference about high chip demand, and that sparked a rally. The S&P 500 erased the morning losses that they had and closed over 1% higher, with NVIDIA really surging. And then on Thursday, stocks really jumped after the European Central Bank cut rates by 25 basis points and they adjusted forecasts. The US data, which we can see here in the Forex Factory, showed higher than expected PPI and core CPI, which is really impacting rate cut expectations. Plus, aren't we really kind of expecting a little bit of a bounce after this huge drop anyway, right? So with rate cuts looming, and if you look down here at the MACD indicator, you're getting a green arrow, kind of a buy signal right now. And I do want to draw your attention to gold. I mean, here's a legit breakout. We've got a nice uptrend. We've had a lot of resistance right here. And then boom, we broke out on Thursday. So here we have gold hitting all-time highs. And basically it's doing that because of expectations of interest rate cuts by the Fed. But you know what, really, gold is just in a bull market right now. Its whole uptrend here is being supported by all sorts of geopolitical violence and tensions, the US election. And if you've been keeping an eye on the FedWatch tool, where interest rate traders are predicting what kind of a rate cut is going to happen at the next Fed meeting, which is September 18th, you're going to see that a 50 basis point cut went from about a 28% probability to over 45% after the Financial Times and Wall Street Journal reported that a larger reduction was still an option. As of right now, it's about a 50-50. Is it going to be a quarter point cut or half a point cut? 25 basis points or 50 basis points? In addition to gold, let's take a look at our good friend NVIDIA. And because of a stock split, these charts are all kind of flattened out. So I like to look at NVDL. This is the double leveraged ETF that follows NVIDIA. So if NVIDIA gives you a 1% upward move today, NVDL will give you a 2% upward move. That's the way this thing is designed. And the fact of the matter is, this company is making cash hand over fist. Business is booming. They're doing really well. And from its peak here in June, we've had a pretty good pullback. As of right now, we're making a nice bounce off of the 200-day moving average. And then on Friday, we had another really good up day. And that was mostly based on expectations for the bigger rate cut coming up next week. Right now, it's about a 50-50. And there's a lot of economists that are making a case for a bigger Fed rate cut. So instead of that 25 basis points that has been expected for a long time, there's a lot of interest rate traders and economists that think a 50 basis point cut is going to happen. Okay, so that's what happened this last week. But what's next? It's pretty clear that everybody's looking at next Wednesday, September 18th, and that's when the FOMC meeting is going to happen and the Fed's going to decide what to do with interest rates. So is it going to be a small cut like everybody's been expecting? Or is it going to be a bigger cut like everybody is now thinking is about an equal chance of happening? This rate cut has been expected for a while now and hasn't been happening because inflation has been so sticky. But this is the Fed pivot. They're going to finally pivot on interest rates, and we will see what this does to the market. We can see a lot of volatility next week. As far as other catalysts, we can always go into the calendar and see who is coming out with earnings, but I don't think it's a big earnings week next week. As you can see on our calendar here, you've got one earnings coming out on Wednesday, one earnings report. But again, I don't think anyone's really paying much attention. They're watching the interest rates and what the Fed's going to do with those. On Thursday, you've got a couple of companies coming up with earnings. You got FedEx. That one should be an interesting one. I think a lot of bullish traders are pretty encouraged about this run-up that we've had, this bounce here. But whether the Fed achieves a soft landing or not, it's really still up in the air. Most of the recent data appears to support a soft landing, but keep in mind that there's always going to be a long and variable lag to Fed cuts. Now, as for the health of the economy, I think next Tuesday with the retail sales report, if the strength and the momentum from last month's retail sales report, which came in well above estimates, will continue. Now, we don't really know what the markets are going to do with the interest rates. Is it going to applaud the interest rate cuts and really have a good bullish move, or is there going to be some profit taking? I'm looking at the interest rate cuts as a little bit of an earnings announcement. I always like to say earnings announcements are kind of a 50-50. Heads we go up big, tails we go down big. You can see that a good earnings report and the stock drops, or a bad earnings report, sometimes the stock goes up really big because of something the CEO said. So I think next week's announcement is going to be a lot like that. One thing that I do count on happening is seeing some volatility. So trade cautiously, have those stops in place, make sure you're doing the strategies that best reflect volatility-driven events in the market. But good luck and haunt those markets.